So according to Bloomberg, in the past 12 months, investment banking profits have surged to all-time highs. So what do they actually do to make that much money, and how can you break into the industry? All of that and more in this video. In short, investment banking provides funds, governments, and companies two main services. One is advisory, which is also known as M&A, and the other one has to do with financing, which is also known as underwriting. But here's where it gets a bit confusing. The large investment banks don't just have an investment banking division. Instead, they have many other client-facing divisions, like what might be asset management, sales and trading, or research as well. So when people talk about investment banking, it's not necessarily the investment banking division. But back to the investment banking division and their services. So financing consists of raising money by selling stocks or bonds on behalf of a company. And the most famous type of financing out there is an IPO, which stands for an initial public offering. This is the first time that a company gets to sell its shares in the public markets. That's the iconic bell on the New York Stock Exchange, and it's probably the highlight of any CEO's career. But wait, why do they need an investment bank for this? Well, the investment bank acts as the middleman between the company wanting to raise the money and investors looking to invest the money. They're the ones that connect both parties and make sure a fair price is set. Examples of major recent IPOs include that of Airbnb, DoorDash, and Robinhood just a few months back. The other part is advisory, which is also known as mergers and acquisitions, and this has to do with advising companies either on the buy side or on the sell side about a deal. Now, these large investment banks are usually very knowledgeable of the financial markets, and using their network, they're able to find potential buyers or sellers. They're able to negotiate and help out the company throughout the process. And lastly, they're able to find a good price for that deal. Recent examples include that of AT&T merging with Discovery, Amazon acquiring MGM Studios, or Salesforce acquiring Slack for $27 billion US. And advisory isn't strictly for mergers and acquisitions. It can also be for other things like spin-offs, restructurings, and so on, but I'm not really gonna get into that. Alright, so we now have a good idea of what they do, so how do they make money with it? Well, in short, it's from fees. On the financing side, here's a table from PwC to illustrate the fees for an IPO. The average underwriting fee percentage you have here is what gives them the big bucks. So if the IPO raises 100 million, the bank takes around 7 million. But there is a slight nuance to this. There's usually multiple investment banks involved in an IPO. So that means they split the fees between them based on their contributions. And in the case of Alibaba, the biggest IPO to date, raising 25 billion on the New York Stock Exchange, it's safe to say that Jack Ma probably wasn't the only one smiling in the room. Now, on the other hand, there's the advisory fees, and these are not that different from a consulting practice where they take a fee for that too. But like I said earlier, investment banks also have other divisions that earn money for them as well. When looking at a breakdown by division in Goldman Sachs' annual report, you can see net revenues in investment banking are high, but there's other high areas too. In this case, investment banking refers to advisory and financing, investment management refers to asset and wealth management, commissions and fees refers to executing transactions like stock trades for clients, while market making refers to the global markets division, which has to do with market making in credit products, interest rate products, currencies, and much more. And as you can see, that's the biggest chunk here. So even though the investment banking division is usually the one in the headlines, there's other very profitable divisions as well. So who are the big players in the industry? Well, there's actually a split between bulge bracket investment banks and boutique investment banks. The bulge bracket investment banks are the big household names, the likes of JP Morgan, Goldman Sachs, or Morgan Stanley, and they really have thousands of employees and offices all around the world. On the other hand, there's boutiques, which are smaller in size and they specialize in a particular area, like what might be advisory. Sometimes they also specialize in a particular industry, like what could be tech advisory, for instance. Examples of some well-known boutiques out there include Evercore, Moelis, or Lazard. And you might think that a bulge bracket is better than a boutique, but that's not necessarily the case. In a boutique, given the smaller size, that also means that junior employees have more responsibilities, which usually leads to better learning opportunities, right? As for the work hours and the pay, they're actually quite similar between the two. Moving on to a career in investment banking, and salary-wise, after a surge in junior staff complaining about burnout, the base salary was recently boosted to around 100,000 from 85,000 a year before the complaints. That's for first years fresh out of college, and on top of that, you stand to make a considerable bonus depending on your performance. But it's certainly not free money. Hours are extremely long, averaging around 80 hours a week and peaking at 100 depending on the time of the season. Now, if you want to see what the day-to-day is like, do check out this other video I made. I'll leave it somewhere up here. As for who they look for, it's the best students in what they call the target universities, which are basically the best universities in the nation. In the US, that's the Ivy Leagues and a couple others. In the UK, that's Oxbridge, LSE, and a few more. In terms of skills, it's about being reasonably good with numbers, having attention to detail, being a team player, and obviously having a willingness to work long hours. But even ticking all these boxes doesn't guarantee you a spot, as the acceptance rate is lower than 5% for the top tier investment banks. So there you have it. I hope I didn't go past the 5-minute mark. If you enjoyed this video, feel free to like and subscribe, it really helps out, and I'll catch you in the next one.